Solution with John Owens, the Director for East Asia for Chemonics International and Senior Policy Advisor for the Alliance for Financial Inclusion. I'm Whitney Harrelson, the Director of Making Sense International's Collaborative Learning and Action Institute, or CoLab. We greatly appreciate John being with us today to share some recent lessons learned on how mobile money is supporting and promoting financial inclusion. While this webinar won't specifically address working with and for young people, the key points John will share are directly relevant for those working with this population group in diverse contexts. John is based in the Philippines and has spent the last 25 years managing projects in the field of financial inclusion and promoting digital financial services. He has also provided training and guidance to mobile money providers, banks, and regulators from Latin America, the Caribbean, the Middle East, Asia, and the Pacific Islands. If you have a question for John during the webinar, please write it into the chat box that's located at the lower left-hand corner of your screen. While he's presenting, please keep your microphone muted, and he'll address questions either during his presentation or at the conclusion. With that, I'm turning it over to John. Thank you, John.
Thank you very much, Whitney and Chelsea, and everybody else who's joined. I'm glad to see some familiar names in the webinar today. Basically, this builds on an article that I had written for Making Sense in Chemonics a few months ago, focusing on the whole shift from mobile money to the broader digital financial services. Basically, we continue to see, a significant interest in new technologies to provide for greater financial inclusion. This is happening pretty much all over the globe now. While there has been a lot of excitement focused, of course, on mobile financial services over sort of, I'd say we started out kind of mobile money around 2005, 2006, 2007, up till kind of the end of the decade. And then there was a shift into sort of looking at broader mobile financial services. But we're now beginning to see that shift in the last 2 years, moving back to kind of a broader focus on digital financial services. This, for me, is quite exciting because it looks at bringing in a range of technologies, players, and partnerships with a much more comprehensive view to providing access to financial services. So there's important roles here and involvement much more now, I'd say, from government, from regulators, and of course private sector players and a broader range than had been earlier on when we were looking just at kind of mobile money. So it's a much broader approach, and it's one that's having a lot more potential for much broader reaching impact in terms of greater financial inclusion. So who are some of the sort of movers and shakers in this industry? We were looking, a lot of the work early on, had involved initiatives from DFID, USAID, early on that was working on mobile financial services, particularly the use of mobile money back around 2005, 2006, 2007. The Bill and Melinda Gates Foundation started getting quite interested in this around that time, and of course they supported a number of efforts, and we've now seen the Better Than Cash Alliance, which involves a broad range of different players, both from the donor sector as well as the private sector. And then the Alliance for Financial Inclusion, which has been working on the regulatory sector and has received quite a bit of support from the Bill and Melinda Gates Foundation. I'll talk more about that. Many of the early players in this field, Globe and Smart, and later on Vodafone, had, as I said, been started focusing on the kind of the mobile money space. And now we've seen a range of different players, and particularly many of them that are crossing borders in multiple countries, and again, a greater involvement of financial banks, as well as payment operators like Visa, MasterCard, and even American Express. There are now over 200 mobile money deployments around the world. But as I said, we're beginning to see a move away from kind of the send money home, or the whole idea of just kind of mobile money transfer, to a broader range of abilities for people to pay a range of different services, including greater involvement from financial players like banks and payment operators. We now see that there are 28 countries that have more mobile money agents than bank branches, but this is growing very, very rapidly. Most of this is occurring in places like Africa, but we also see quite a bit of growth in countries like Bangladesh now, which is growing very, very rapidly, and in the Pacific Island area, where we're beginning to see quite a bit. And then, of course, in Latin America, the one country that has grown very rapidly is Paraguay. And I believe, if he's here with us, we do have the acting superintendent of banks who is to join us for this webinar. So we're beginning to see this broadening out across multiple countries, and I believe this trend will continue. The exciting part, of course, is in countries where we now have more mobile money accounts than there are bank accounts, and this includes primarily Kenya, Uganda, Tanzania, and Madagascar, where this is occurring, and where I think particularly outside of Kenya, Uganda, Tanzania in particular, have been looking much more at a broader range of financial services rather than just kind of the send money home. We're beginning to see quite sizable amounts that are now going through e-money, mobile money wallets, particularly in Kenya, with over 60% of the GDP now running through mobile money platforms, 30% in Tanzania, and over 20% in Uganda. Yeah. When we first started in this, as I said, it was pretty much in the early part from 2005 until about just a couple of years ago. We had primarily the telecom operators who were getting involved, and a few banks and third-party providers, and everybody was looking at sort of being kind of a standalone solution. And there's still some of that in a few countries, although that's now beginning to shift. Much of this was due to I think, a broader realization that more players were needed. So we've seen this shift to broader digital financial services, of course, with the Gates Foundation, which focused in the last few years on sort of three basic principles: basically expanding the reach of digital financial service infrastructure, driving participation in the digital financial system, and fostering better regulations and policies. See, we have any important partnerships to note? Yeah, I think I'll get into partnerships in a little bit. We're beginning, as I said, we're beginning to see a shift from kind of standalone to many more people collaborating. The Better Than Cash Alliance is a good example of kind of bringing together kind of a consortium of both the public and private sector that's looking at a much more concerted effort to kind of electronic payments, digital payments in a much broader range than was sort of the initial focus of the whole mobile money space. And the rationale was basically an alliance of governments that government agencies, the private sector, and development organizations really focusing on creating a whole global movement toward shifting out of cash into electronic or digital payments. And the realization here was that billions of dollars in cash payments are being made every day, and a much better way to do that was to shift to digital financial services or electronic financial services. You know, the obvious benefits were the ones that have been shared multiple times. I think this is looking at the whole cost savings that decrease the cost of cash or in-kind payments, greater transparency, increasing accountability, tracking and reducing corruption and theft, security, typically safer and faster delivery. You look at countries like Afghanistan is often cited, where the national police were beginning to receive their salaries through mobile phones, and many of them believed they were getting a 30% pay rise because for the first time it had kind of wiped out corruption. They were getting their full wages. Places like Argentina, where there was a shift to electronic payment cards, those admitting to paying bribes reduced from almost 4% down to 0.3% only. We saw significant cost savings in countries like Brazil, where the cost of transferring, additional cash transfers literally dropped from 15% to under 3%. Mexico, recipients who were being paid electronically have saved quite a bit, up to 77% in their travel costs compared to those who were receiving cash payments. And of course, security in a number of countries, Haiti, for example, where electronic vouchers cut aid delivery time by 3 days, and mobile money cut it even down to much shorter times. In Kenya, we've seen people who were involved with voting, for example, under one of our projects, teaching people about voting, and it was much easier to have them pay through their people attending these kind of workshops being paid through mobile money. And our company saw a drastic reduction in costs in terms of handling those recipients. In Peru, people receiving conditional cash payments now, for example, have an opportunity to save and build assets in those accounts. And we also see new market access. So in places like Ghana, with over 300,000 people who are now able to access insurance, for example, for the first time, or Mercy Corps, which has been working on an AgroFin mobile service, which is enabling hundreds of thousands of small holder farmers in several countries to access mobile financial services with mobile farm productivity information. And of course, in the Philippines, we've had BPI Globanco, which has been utilizing kind of a combination of mobile money, digital payments, and digital options that have allowed them to rapidly open up as many as 300,000 accounts. And you look at countries like Bangladesh, where it already at about 7 million. So I think where we are at now is that we're beginning to see a greater appreciation for the role of partnerships, and the role of not just telecom operators who were opening up sort of e-money issuers, but also banks getting involved much more dramatically, or third-party providers who are kind of providing linkages, businesses, of course, that provide services to customers and clients that could now begin to accept mobile money. I think when we first got involved, a lot of focus was in terms of financial inclusion, looking at the poorest of the poor. But the reality, as myself, a user of mobile money, has realized over time, is that to have a real value proposition, you need to have an ecosystem. So the more players you can have that are providing services, and many of these are bank customers initially, the more of a value proposition there is for the average consumer. When we talk about sort of digital financial services for financial inclusion, there's several key steps in terms of creating a roadmap. As I showed in the previous slide, quite a bit is focused on kind of a customer-centric approach. And basically, there's a lot of neat things we can do, but really, what is it? What's the problem we're trying to solve from the customer standpoint? So in addition to taking into account the customer's perspective, you also have to look at the market conditions. Every country is different. The approaches that you have to take in countries would be different depending on people's comfort and with new technologies, their ability to feel comfortable texting, so their literacy, both their ability to use to be literate, but also technologically literate and comfortable with using a mobile phone to transact. And this is where the youth aspect becomes important. I often find that some of the early adopters are usually the youth. And here in the Philippines, for example, we found many elderly who were using the youth to help them with doing transactions initially. So many of the elderly were relying on younger people to help them, usually family members, daughters and sons. And then, of course, the regulatory environment has been a key issue, and one, as noted, that the Gates Foundation has been working on and supporting. A supportive regulatory environment is key. In the beginning, regulators, some of them were concerned. I think when we looked at this situation many years ago, regulators previously were viewed more as gatekeepers. Again, it was an area that they were not as familiar with. But now I think we're seeing not only a greater acceptance of regulators, but also regulators seeing themselves as sort of economic enablers rather than just gatekeepers. So there's much more engagement now between regulators and financial service providers in the private sector. In particular, the Alliance for Financial Inclusion has played a very key role here. They have now representatives from 91 countries and over 110 regulatory bodies that are represented within the AFI network, and a fairly large group that are involved and regularly discussing digital financial services. So not just mobile money, but also agent banking, and other forms of e-money services in countries as diverse as Russia, where e-money is very active, and agent banking, particularly in countries like Latin America, and then the whole range of mobile financial services as well. The next factor to take into account, of course, in offering this has been the whole perspective of the institutional perspective. So taking into account if you do have small financial institutions or microfinance institutions that would like to take advantage of mobile money, you do have to look at them, government agencies that want to accept mobile money, how much is it going to take for them to be able to integrate and easily accept it. And of course, then there's the product development phase, basically looking at building on the previous, what are we trying to solve for the customers? What's the environment? What will the regulations allow? What's the level of the institutions? And then basically then it's a product development phase, working on that. It's desk testing your product, feedback from focus groups in the target market, and really stress testing to make sure that when you roll out a service, it is going to work. And of course, the next after that is the pilot testing stage, followed up by kind of the whole launch. And I know that many people try to fast track this process, but even Safaricom spent over 2 years understanding the market to design and pilot test their services before rolling out M-Pesa. So this is an area that I find many people, particularly telcos who get involved in the sector, who are used to very quick rollouts, 3 to 6 months usually, mobile money and mobile financial services and the whole involvement of greater digital financial services does take some time. And it takes time to understand all these um, different aspects of the roadmap, and then of course making sure that you've got the proper customer service and back office staff. This is different from selling a ringtone or some other value-added service. This really is people's money, and it is one that takes a lot of forethought. And then, we've seen the people ask about the donor involvement. I think we've seen a number of different initiatives with donors getting involved with digital financial service providers. Early on, it was in mobile money, and now we're seeing a number of initiatives that are working, particularly groups like the Gates Foundation or the People Under the Better Than Cash, which are really looking at, providing some form of technical assistance or R&D, working with regulators or pilot testing new services. For the donor agencies, you've got benefits kind of across all three. So the digital financial service provider might get some additional R&D or TA. The donor agencies, for example, get to leverage resources, technological platforms they wouldn't have been able to otherwise. And of course, project implementation partners get the opportunity to take advantage of mobile money to improve efficiency, reduce costs, and improve outreach. A few examples I'm quite familiar with in our USAID's Kenya Transition Initiative, the one I was mentioning in the picture of the gentleman here. Basically, when they shifted to mobile money payments using M-Pesa's online bulk payment system, projects saved and USAID saved 60% on disbursement costs. In the Philippines, we were able to get over 1,100 rural bank agent outlets licensed and accredited. And again, it was a very kind of a turnkey approach. Over 390,000 new clients were brought on, and these banks process over $400 million in mobile money-enabled banking transactions, something that would have been difficult probably if the banks had tried to do it on their own, or if the mobile money issuer had tried to approach the banks one by one. We've had other projects that have shifted away from kind of check payments to digital financial services for just simple things like regular payments and salaries, and saving as much as 74%. In Nigeria, one of the largest banks, microfinance banks, has now formed a partnership again with the support of USAID to work together. They have over 700,000 clients and 320 branches where they're just beginning to start working on mobile money as a way to facilitate greater banking transactions. So these are just some of the examples that are out there, and there are many where either mobile money or we're looking at electronic payments or the ability to utilize agents to reach out further. And of course, we're beginning to see, and this has, I think, been well documented, the whole government-to-person disbursements via digital financial services, where the costs have been quite dramatic in a number of countries, both in Latin America and even here in the Philippines. The next area that I think is quite interesting is the whole shift in terms of banks making use of mobile money. I think initially, for mobile banking, kind of we looked at the excitement of mobile banking. A lot of big banks are there providing mobile financial services, but we saw the opportunity for mobile money to really now build on this. So you saw, I think one of the most successful is M-Shwari, which built on the M-Pesa platform in Kenya, Bcash, which has opened up well over 7 million accounts in a very, very rapid amount of time in Bangladesh, with now well over 70,000 agents probably the fastest growth we've ever seen in terms of an agent network. And again, making use of the mobile to provide these financial services. Easy Pesa in Pakistan, Banco in the Philippines, and MBank, which are all using mobile money. And we're beginning to see, the whole, I think, transition to, as more and more smartphones get out there, Android phones drop in price. We're beginning to see, reductions in costs of very simple Android phones that are coming in under $50. And I think this is going to continue to expand the whole wave of digital financial services, particularly that are mobile enabled. And the other area that's really exciting is, several years ago, many of us, myself included, argued that the whole use of mobile financial services or mobile money could sidestep traditional payment operators altogether in the developing world. But what we're beginning to realize, this is not really happening, at least not the way people expected it to happen. Instead, now we're seeing a convergence of different technologies to broaden access via multiple channels that build on mobile networks and existing ATM and point-of-sale networks, while ultimately we could see mobile phones becoming fully enabled mobile POS machines, and there being less of a need for traditional POS machines and or ATMs. At this time, in quite a few markets, there's still a tremendous opportunity for building on ATM and POS networks. So interoperability and interconnectivity are now the new buzzwords in the digital financial services industry, and we see a lot more discussion about involving the role of payments, not payments in themselves as creating financial inclusion, but sort of being the glue or the place to start from that will broaden greater access to financial inclusion. And then a range of products as well and businesses that are making use of mobile money. One of the examples, MTN Ghana, that has teamed up with microinsure to offer mobile insurance, and this is beginning to happen in a number of countries. And another area that sort of related to this is, even on the government side, another good example. The other day I was with the Tanzanian Internal Revenue Service that basically had petitions from members of the public who wanted to pay their taxes via their mobile phone. And in one area where they were involved, they decided to shift car registration process, which was a very cumbersome process, to mobile payments. Within 3 months, 80% of all transactions were being done through mobile payments, with tremendous cost savings for the customers and consumers. I think some of the lessons, just getting into the lessons, and then I'll answer some of the questions that people have raised, and we can open this up a little bit, is really looking at, kind of commitment of a management team, those who are involved. This is not providing just another service. Digital financial service does take a lot of time. It is a financial service. It's not, as I said, a value-added mobile technology solution. The whole ability to build a mobile money or a digital financial service ecosystem is key. Being able to have sufficient locations to transact, and I'll talk a little bit more about that. An awareness of how to make use of digital financial services, and promoting sort of value propositions across everybody. It's got to be the customers, the businesses that use it, and the providers, which is oftentimes banks and oftentimes telecom or other third-party providers. The partnerships are key. The network effect is definitely there. And so a lot of these players are beginning to realize they can't do it on their own, and they really need to bring in as many people as possible. Client education and the awareness campaign are critical. This is something that we learned very well in our experiences here in the Philippines, particularly working with microfinance opportunities in this area, looking at the role and the importance of the education and awareness of clients. And really, I think now we're at the role too where we're looking at not just client registration, but active usage. And to be an active user, you need multiple use cases to really make it work. And the last 2 points, and these are ones that I raised in the paper, and I'm drawing very carefully from the experiences that I witnessed earlier this year in Bangladesh, is building trust in digital financial services is key. You'll see that, in this, if I can do a drawing, let me see here. You'll see here there is, in this chart, there's a number basically that could be easily reached. This is inside a shop, an agent shop. I found that many of the really good mobile or digital financial service providers, in this case, Bcash was using the mobile as a means to provide access to banking services through an agent network, and they were very careful to be able to provide information with the number of the agent, a place that you could call to if there were any issues. Very concerned with customer service, and of course their hashtag was, and I'll bring that up in the last slide, is basically 24/7. So the importance of, apart from trust, is that convenience and access are really key. The providers that I've seen have really made this, where they've been successful, is they've really focused on kind of providing convenience and access 24/7 and as many locations as possible. Bcash has done, hands down, one of the best jobs I've seen in terms of providing a very ubiquitous market outside of, say, Kenya. And they've done it at a much more rapid pace than we've seen in many countries in Africa. So it will be exciting to see what happens. And on that note, I'm going to go up and answer some of the questions that you've all posted. Okay, let's see. Mariola talked about the benefit of empowerment. I agree. And let's see. Sarah Murray asked, do I see an uptake of financial services by individuals in Peru that receive transfers via mobile money or elsewhere? They're trying to understand if hold on. Trying to understand if mobile transfer recipients tend to need incentives to move beyond receiving transfers to using newly available mobile financial services. Yes, I think again, for a lot of people, one of the key things is really making sure that you can educate them and help promote the various use cases that they can use their mobile money so that they can actually learn how to use it. In the Philippines, for example, I know the telco was providing as much as a 10% rebate in the form of mobile money or e-money back to the customers so that they actually had an incentive to use it again, and the discount was sufficient enough that it really encouraged many people to shift where they were purchasing their airtime load from. Of course, that's one of the easiest places to provide incentives, and it is one that those that usually are non-banks, the telcos, provide. In terms of others, I think it's really, looking at other, making sure that you can provide that kind of promotion. In Peru, I have not yet seen, I was just in Peru last week, I did not get to see much on the mobile money is relatively new in Peru. They have been doing digital financial services, and that has helped. I think the idea of promoting options to save, options of convenience of where you can spend digital financial service, your digital money, is very, very important. Um, and then piggybacking on Sarah's question, this is from Sophia. I'm getting ready to go to Zimbabwe to study whether consumers who've been using mobile transfer will go for EcoCash, Save, or even EcoCash credit services, and how that may affect mobile transfers, because they will not truly have deposit saving accounts and access to their own. It will not no truly. Oh, now, sorry, now truly have deposit savings accounts and access to their own line of credit. I think we've seen this in the Philippines. If you look at the upfront slide, and I can jump back to it, right here, these two ladies are actually opening up bank accounts that provide them with an e-wallet. And for both of them, one young lady in the front, she had never had a bank account. She was in her 30s. The other woman was in her 50s. Worked in here in the big city. Was from the provinces. Had made a lot of money working abroad. Did have a bank account years ago and had lost that. Just didn't see the value of having one. And their employer paid them now, and they got a text message when they were paid. And instead of just being an e-wallet, it was a real bank account. So they had the option of earning interest or getting a lower interest rate, but having life insurance. One of them chose life insurance, the younger one, because she had children, and the other one, whose children were all grown up, decided to have a higher interest rate. So that for the first time, they were saving a lot more. They found they could do a lot more things with it. They had a debit card that they learned how to use for the first time in their lives. So I think, they saw a range of different options. And Banco's done a very good job with the fast-moving consumer good industry. We're seeing this in a number of countries too, where the access of being able to digitally order and receive a loan on your phone makes it much, much easier than having to go to the bank, particularly if you're a repeat customer. So I do believe that again, if it's as long as people understand it, and of course there is a network effect, so the more people using it, just like the Commercial Bank of Africa found out with M-Shwari, they were able to open up many more accounts than they'd never been able to open up because of the widespread use of M-Pesa, and people really did want to have the ability to, rather than just transfer money, have an ability to move that money into a bank account, and that's what M-Shwari offered in a very, very reasonable way. So I'd say if you're going to Africa and you're looking at the role that e-money can play in terms of greater access to credit and savings, M-Shwari would be a good example to take a look at. What role will digital financial services play in helping us achieve financial inclusion by 2020? Well, I think, we are beginning, as I said, it's happening everywhere at a much more rapid pace than we've ever seen before. There is a lot of interest. I think we are going to see a number of countries where at least people will have access to an account, whether there's some debate about, in Kenya today, for example, 70% now have access to a mobile wallet, and many of them are using it on a regular basis. Is that financial inclusion? I think in some places where you're just using it for money transfer, some would argue that it's no different from receiving a Western Union transaction now and again. And is that financial inclusion or not? But many are now beginning, as I said, people beginning to use it for a range of different services and products, particularly those that are using it multiple times a week. Um, and arguably, even the mixed market now looks at the number of financial access points to include mobile money agent locations. And this is an area as well that I know within AFI, many of the banks that are supporting, the central banks that are supporting greater financial inclusion are looking at agent networks, both for regular kind of branchless banking as well as e-money services. And I think it is. There's just too much interest. I just came back from a study group with the Chinese, and the range of online credit services is growing so rapidly in China. You've got institutions like Alibaba that provide hundreds of millions of people with access to sort of basic financial services in a way that was never possible before. I think we are going to see this playing a greater role. Some countries will grow quicker than others, but overall, I think it's a growing trend, and there are very few countries where I don't see this being playing an important role. It will be complementary. It's not going to completely do away with banks. I think this is going to complement banks and other financial providers, and I think as people get more involved, banks are seeing the opportunity of linking to these systems and building on them, as we've seen in Kenya. So this, I think, will be a benefit for everybody. And ultimately, with the banks getting involved and other financial institutions, we will see greater financial inclusion. Okay, let's see. We have another question. Sophia again. What about customer redress issues? Are regulation focusing on anti-money laundering with a minor focus on consumer protection and redress? Also, are provider policies emphasizing consumer redress channels? Is it safe to assume agent and consumer education are increasing consumer awareness about their rights for redress? Yes. In fact, I think there's a growing awareness at this point in time about the importance of consumer protection issues. This is an area that I know that I've seen within the regulators that I've talked to. Many of them are concerned with that. The conferences I've been at this past year, quite a bit of the focus has been on how do we provide consumer protection or consumer protection best practices and apply them in the kind of the mobile realm. So there is quite a bit now looking at that. I think many of the regulators for a while have been looking at kind of a tiered KYC process. When it comes to your question about anti-money laundering, they've been sort of looking at a proportionate risk-based approach to allowing, again, more flexibility in very small accounts so that more people can participate. But at the same time, they realize many of these people don't have the same educational background, so consumer education and protection are crucial and very, very important. All right. Okay. I hope that answered your question. Any other questions? One more question.
Let's see if anyone else has any from the audience. Okay,
I see a lot of colleagues here.
One typing right now.
Okay. I would have expected Jesse to say something, or Loretta Michaels, or Monique Cohen out there. Or Amanda Lutz. Okay, 4 people are typing questions now. Oh, all right, here we go. Debe ser el rol del Estado el proveer de comunicaciones locales. Um, you're looking at the role of the state in providing the infrastructure for local communication infrastructure to allow for more connectivity and more poor areas of the country. I think, to answer your question, I'm going to answer this in English. Hopefully you can understand, Julio. That I think in my experience, I've seen that governments can play a role in terms of providing incentives, possibly tax breaks or special privileges that to encourage companies to expand in areas that they normally wouldn't. It is costly. There have been some roles I know in Mexico in terms of the government being involved, and other countries where the telecommunications industry is either directly controlled by the governments. Many of them are interested in more than just the bottom line. But even for the companies, even for most countries where the private sector plays a much bigger role, I agree with you that governments that want to see this can provide the right incentives to encourage more infrastructure in rural areas, and that can be key as well. All right, let's see. I hope that answered your question. Okay. Loretta, how many of the regulators you work with continue to want mobile money to be bank-led? Okay, good question. I think this is a fairly divided sector where we do see the banking sector being concerned about mobile money impeding in their sector, and regulators sometimes being concerned about new players that aren't yet really don't understand what it means to be a mobile financial service provider. I mean, a financial industry player, which they do become, and requiring better compliance. So I would say there's sort of a mix. In Africa, you see East Africa, which is very much focused on pretty much mobile network operator provided, and then West Africa, which has kind of a mixture of more of a focus on encouraging banks to be involved, although they are beginning to allow non-banks to be involved. In Bangladesh, in Pakistan in particular, they do want to see the banks being involved. In Pakistan, there were joint initiatives between the banks and the telcos. And that was in Pakistan, but in Bangladesh, it's pretty much bank-led, and that's one of the more successful bank-led models. But again, there were very unique circumstances that made that happen. In Latin America, I think you're seeing countries like Peru right now that has a very open model between banks and non-banks. El Salvador that's taking a look at this issue as well, that currently has a law that's being proposed. Um, the Philippines, of course, where it's pretty open, and even in Indonesia, where they're now allowing more freedom for non-bank institutions. So I think we're beginning to see sort of a greater openness to different models, if that answers your question. And some of them that I think where there was a focus only on bank-led are now taking a slightly different look at it going forward. But I can't give too many details. But I think you are going to see some interesting developments in 2014. Monique Cohen, what do you think is the most cost-effective way to provide consumer education? Should the emphasis be on personal financial management or building trust and confidence in the technologies at the bottom of the pyramid? Who should provide this consumer education, the public or the private sector? Good question, Monique. I think you probably already know my answer to this. We experiment a lot with personal financial management, and that can be a tool, I think, for people who would like to see people using digital financial services in a way that actually helps them manage their money better. And services can be built to make that happen. We are beginning to see companies like Movin Bank in the U.S. even that's actually creating applications that actually build in the ability for people to better manage their spending and give them warnings whether they're doing well or not. That's actually built into the mobile financial service. But I think in a lot of countries where people are just newly getting involved, I think a lot of the consumer education has to start with that issue that I mentioned in the end of initially trust and confidence. That has to happen first, and the personal finance management can happen at a later point in time. I think for this to be sustainable, most people, I think it has to come from the private sector, and rather than the public. I mean, the public can play a role in it, but I think, or they can actually mandate a certain amount of information so that there can be, a building in kind of requirement of consumer protection best practices to make sure people are understanding the risks and are managing the way they enter in digital financial services better. But ultimately, it has to be the private sector, I think, if you want it to be sustainable. And the ones that I've seen the most successful are the ones that kind of build on use cases and have people as comfortable as possible, as quickly as possible, using the greatest number of services. And Jesse, what are the major obstacles you foresee when considering cross-border opportunity and connectivity? Interesting that you asked this. This is actually going to be a fairly significant part of what I see the regulators interested in, both the issues of interoperability and the issues of cross-border remittances. I think we're beginning to see the potential for remittances that are not just north to south anymore. The original connectivities were the Western Unions and the home sends, where traditional north-south remittance companies could send money and the recipient receives it in a mobile wallet or through an agent that's using a mobile phone. But we're now beginning to see some of the companies like Orange, for example, in Africa, that is going across borders. Of course, it's been easier in the BCAO in Senegal and the neighboring countries where money is able to be moved across borders because they are using they have the same regulations, they are using the same currency, so it is easier. In the connectivity, the first one we saw actually was Maxis in Malaysia, M-Money, and Gcash that were actually using the UTIBA platform, where they were able to send money from ringgit, converted over the air with HSBC in the background, and landed in a Gcash wallet on the other end. And they got their international remittance licenses, and of course, because it was the same operator, that made it easier. I do think we're going to see several of the larger, more regional mobile money providers that where there is potential in a lot of cross-border transactions. So this could be the Vodafones, the MTNs, the Airtels, the Tigos, particularly those that have operations. Digicel, for example, who's already been doing this. And interoperability, I think, we're gonna continue to see more of that. Africa is a good example. Nigeria is a good example of interconnectivity and a certain level of interoperability. Everybody's connected to the switch. And I think to see the realization of cross-border remittances, we will need to see greater harmonization across regions. That will take some work, but I think we are going to see more of that. There will be more of a drive, particularly in these countries where a significant number of people are using mobile money already. So I think the markets that we're going to see it are pretty much the ones that have kind of reached that tipping point. Uganda, Tanzania, and Kenya would be probably one of the areas where we'll potentially see this and the dramatic effect in it, interoperability, or I should say cross-border remittances anyway. Hope that answers your question. Monique, I did focus groups in Zimbabwe last year and asked the question of customers and those in rural areas were adamant that they would only get consumer education from the company, but my view is public should also step in for consumer rights. What do you think, John? Well, I think, as I said, I think the governments and the regulators can set various standards to ensure that consumer protection practices are being discussed, and that certain amount of education is being provided, at least not just in a written form, but in plain language that people speak, that lets them know about things that both build on trust and confidence, but also help protect the system. So I agree with you. I think the public, not necessarily stepping in, but the public kind of providing a framework, sort of some minimum standards to follow, which the private sector should be able to do in such a way that hopefully, if it's done the right way, it can be a win-win situation for everybody. And let's see, Rohit, I hope I pronounced that correctly. Aswani, sorry. How significant do you consider the financial inclusion commitments made by the central banks of countries under the Maya Declaration? Is it more towards an obligatory side, or is it at least a small reflection of serious intentions? I'll have to say I was at the AFI event in Kuala Lumpur, and the real significant interest of those involved with the Maya Declaration and the pride with which they presented it and the way they followed up, I would have to say it's not just a small reflection, but if the countries that make these Maya Declarations do so with quite serious intent, I think the whole idea of having your peers all together who you're presenting to, this isn't just the public, but your peers from around the world, you have to seriously think before you get up and give a Maya Declaration, because you're going to see these people a couple of times a year, and they are going to follow that progress. So I would say the Maya Declarations and the Sasana Accord now, which has more impact figures that are added to the Maya Declarations, I think these are quite serious, and we are seeing I think, to me, a whole movement, as a colleague of mine said, where else would you have ever thought you'd see a movement of central bankers and other regulators focused on financial inclusion? So, and of course, it's not just mobile financial services, but in this last year, quite a significant number of the Maya declarations that were made at the Alliance for Financial Inclusion Summit were focused on ways to improve financial inclusion and access via mobile financial services. I spoke about the process of market research and the lengthy preparation as Safaricom did before we went out. Did you see a positive relationship between how much time telcos and other providers spend speaking directly with customers and successful uptake and continued use, or cases of where digital failed due to a lack of customer engagement? Yes, I've seen both. I won't name the bad experiences, but I have seen some that rolled out to market too quickly and did not engage customers, didn't do the type of planning, didn't look at how to carefully build that agent network, and where it failed. And or where it's not yet working, and there have been a couple of countries where we've seen false starts, though, and they've worked on it and they've been able to be successful. Paraguay is a case in point, where in the beginning it didn't work. They restarted the service. Even in Tanzania, I think they tried to copy Kenya in the beginning and it didn't work. And they shifted, and then all of a sudden it took off in Tanzania in a way slightly different than it had in Kenya, but they had to really understand that Tanzania was a different country. Bangladesh is a country where, I'd have to say I'm very impressed with the interaction that I've seen with customers, and both bKash and Dutch Bangla Bank have spent quite a bit of time, and I think that time in terms of understanding their customers and what it takes to provide a good service, mobile financial service or digital financial services, has really paid off. Rwanda, you see Visa working quite a bit on this. MasterCard has been in South Africa looking at uses of digital financial services, and in Egypt. And I think quite a bit of this is paying off now. So I think I've answered all questions, and I think we are at time up, unless anybody at Making Sense has anything they'd like to add.
No, we'd just like to thank you so much, John. You've shared some really practical guidance and takeaways from various initiatives and also your extensive experience. We're going to be posting the recording of this webinar on YouTube so that all of you would be able to access it again if you're interested and share it with your partners. I hope you took away some very useful information that you can also apply to your programming. And if you like this webinar, we invite you to participate in others we're planning for 2014. We'll be promoting them in January and invite you to share your ideas for topics you're interested in learning about. And if you'd like to lead a webinar to share your expertise on a specific topic, please email me at whitney@makingsense.com. And we also hope you will flag October 6th to the 8th on your calendars to attend the Global Youth Economic Opportunities Conference, which will include a learning track on financial capabilities and youth-inclusive financial services. So you'll be able to engage more on topics such as the one John addressed and perhaps see him there in person. So thank you so much, John, again, and I hope you have a very good rest of your evening.
Thank you very much. And as I said, if anybody would like, I do have a blog where you can follow things that I see my own observation. I know I've been a little bit lax, but I am going to be getting that active again. And on Twitter, for those who follow on Twitter, I also provide regular updates on Twitter on uses of digital financial services. So I'd love to engage others, and hope to meet all of you around the world in the coming year.
Thank you, everyone, for participating. We'll be closing the session now.
Thank you.